So what's an inverse ETF and how do you use it to make money when stocks go down? As the name implies, inverse means the opposite. So if the underlying stock goes up, the opposite movement goes down. So as stocks go up, I don't want to hold the inverse ETF. Now, if there's a lot of panic in the market, if it's a short duration, you might not be able to profit much and you might actually lose money. So I'm not going to use this that often, but I used it very well in 2020 in early March when people started to realize there was going to be an issue right before the government shutdown. And I made a good amount of money as the UVXY went up about 500% in the course of a week or so, and then quickly exited that position because I knew I couldn't stay there for long. So this inverse ETF, this blue line, it's not drawn to scale because this could be 1x, 2x, or 3 times the price movement. So if the SP 500 moves up 1%, this could move down 1, 2, or 3%. And the opposite is also true. If you have several down days and it's a dramatic drop in price over those days, this could move up 3 times as fast. That's why I was able to move up about 500% when I was with UVXY over a very short period of time, and then exited that position before I knew it was going to drop, just because as things bottom out, that's how it goes. So let's take this for example. As the stock moves up, inverse moves down. As the stock goes down, inverse moves up, and they're going to move opposite to each other. When there's a major black swan event, think of World War III gets declared, or some horrible pandemic, or whatever you can think of it, Lehman Brothers collapse, dot-com bubble, any of those types of things. That's what I'm using this. I'm not using this on, oh, there might be a government shutdown for a day, because that could change in a minute. But things that I know are going to cause issues in the markets for several days, that's when I take advantage of this, and then I use it for a couple of days. So I start to have a drop. Maybe when I start to see that drop, maybe I lose 1%, 2%. That's an indication that something bigger is going to happen. And if it's making sense to me, that's when I chose to, like in March of 2020, I bought UVXY and it went up about 500% in the course of a week or 2 weeks or something like that. And then I exited as soon as it started to lose value. One of the things I like to use with these inverse ETFs, being that I know it's going to move in one direction and it might pull back a little bit, but it's not going to be huge. I really like to put trailing stop orders on this, especially for the sell side, because I know when it starts to move down, it moves down quickly. And if I'm not at my computer, I'll miss it, and I have a day job, so I'm not going to watch stocks all day. So I put the computer in charge, and I take my emotion out of this decision-making process, and maybe I say, if it has a 20% drop, sell everything. And that's what it did, and that's why I was able to get such a high return on a short period of time. And again, I'm not going to put all my money into this. I'm only going to put maybe 5% and help basically hedge against any of the losses I have in my regular stock portfolio. And I'll also have some put options that I'll purchase just for downside protection for those issues. Here's the chart of what I did. This is in March of 2020. Just realized that there were some stock splits and things like that. So back then, the shares were actually around like maybe $10 or $20 a share. And when I sold them, they were at like $100 or $160 a share. I can't remember exactly, but it was a rapid rise in that short period of time. That's where I was using these to the advantage. VIX is the volatility index. So basically, if this goes up, people have fear. The opposite of that is SVIX. This is basically tech. So the opposite of that is SQQQ. And if you have SPY, one of the opposites would be SPXU. These are not the only ones. There's many out there. I'm not saying to buy these. I'm just saying that these are some of the ideas that you can look at for inverse ETFs. If you look in the description below, I'll put a link to a couple of websites that have multiple other ETFs and inverse ETFs listed. I'm not endorsing any of these, just to be clear. I don't get money from them. I'm just saying do your own due diligence. Just make sure that whatever you do, I wouldn't hold it for a long period of time. And research has shown over a 20-year period, just buying and holding the S&P 500 for 20 years without doing anything fancy has outperformed 90% of hedge funds and actively managed funds in the past. So I wouldn't risk an entire portfolio on this, but I might use like 1 or 5% of my portfolio, understanding that this is high risk and potential for high reward. These can lose value, and past performance does not guarantee future performance. If you enjoy this and you want to learn more about how to make more money, how to save, and how to invest, please subscribe to this channel for you. Thank you for watching and have a great day.